Hey everyone, this is Ben Deal, getting you the best deal in real estate. Excited to work with you and thank you for your time today. Going to be talking with you about the buying process. I'm blessed and honored with the opportunity to help many people buy their first house, their second house, investment homes, or also working with veterans. And so I love working with anybody that is looking to buy a home, and just wanted to give you a quick overview of what that process looks like, what it feels like, what to expect. Because for a lot of us, we're only going to do this process a couple times throughout our life. So I'm here to help you, guide you through that process to make sure you know what to look for and what to expect. So just want to get you started off with some baseline information. I'll give this to you information once, and then you can come back, revisit these videos at any time. Just if you do have questions, I'm always happy to ask. I'm always happy to answer those questions for you. So feel free to ask anytime. And I just want this to become a resource for you as we work forward through the process of buying a home. So typically when you're looking to buy a home, there's a number of stages throughout the process that we go through. The first stage is going to be getting pre-approved. A lot of people I work with, they're like, hey, I'd love to go out and see this house. I'd love to see, this is what I want, whatever, whatever. And my first question to anyone is, hey, I'm excited. You're excited. You're ready to look for a home. Have you talked with a bank or a lender about getting pre-approved? The reason why pre-approvals are so important is it'll give you the qualification for what you can buy. So some people will come to me and they'll be like, oh yeah, I want to look at a house at this price range, say 4 to 500,000. And then they realize they really are qualified for 3 to 400,000. Or, it could be, hey, I think I'm only qualified for 250,000 and they can get pre-approved for up to 400,000. So I just think and want to impart, it's important that you get your pre-approval taken care of first. And the places that I direct my clients to and recommend you to, as well, is to reach out to your current banking institution. I highly encourage, if you're working with a local or regional bank, to work with them. There's a number of philosophical and reasons why I love working with local and regional banks. It keeps the money circulating in the local community. Credit unions, I love. I bank with credit unions. A lot of times when you work with the major banks, they may or may not have a mortgage company that will feel like customized and specific for you, where you live and where you are. And I've just found that there's a lot of value and benefit to building a relationship with a bank that you currently bank with, especially if it's a credit union, a local bank, a regional bank. They would love to have your business and help you build the relationship with you. So step one, go to that institution that you have a financial relationship with first, and really the longest, and see what mortgage solution they have for you, what program they've got. They will take you through their application process, and then they will give you a pre-approval letter or a conditional pre-approval letter. That letter is important because it'll give us the range for what you're qualified for. And that document is critical when we find the home that you want to put an offer in on, that we put that letter, that pre-approval letter, with your offer, with the contract that we submit. So that pre-approval process is really the place that we get started. So want to encourage you, let's go after your finances first, see what you qualify for. And if you're not in a position you can get qualified for, I'm happy to help you get set for success, whether it's credit building or if it's finances, saving up, whatever it may be. They're a great place to start because they will let you know, hey, this is where you are, you're ready to go, or we need to work on some of these things. So from a financing perspective, that is step one. So once we've got our financing taken care of and you've got that pre-approval letter, shoot that over to me and let me know. I'd love to connect with that bank, institution, the lender, the mortgage broker that you're working with, introduce myself so we can build a great working relationship with your lender. That's important through this entire process. If you don't have a bank or a mortgage broker, a lender, anyone that you know of that could help you with that, I am a resource for you. I've got a number of lenders, banks, private mortgage companies that I can connect you directly with, and I'll give you options. I won't give you just one, I'll give you 3 or 4 or 5 or however many you want, so you can go through this process and find the right one. But once we get that, the next step is identification. So identification is this great process, and I just think of it as a giant funnel. So like, especially if you're looking to move to Houston or you live in Houston, Houston is a gigantic city, like 80 square miles that you can live in. You can live all the way up in Willis, or you can live in Galveston. You can live in Berkshire or Brookshire, or you can live all the way in Baytown or wherever you want. So there's a lot of funneling that we have to do. I want to help narrow down what it is that you want. Geography is really the most important place to start first. So geography, where do you want to live? What neighborhood do you want to live in? What schools do you want to have your kids go to? Or is schools important? The big thing in Houston is transit time to work or to an institution that you really will need to get to on a frequent basis. So I work with a lot of veterans, so they want to be close to the VA or within, a straight shot of the VA without having to get through a lot of traffic. So there's a lot of things I want you to think through when you're thinking of geography. What part of town? What does the access look like? What are the resources that are there? What church? What school? What retail? What's the access to the highway? Do you want to live in the city, out of the city, a subdivision? Like, what does that look like? So geography is super important. So let's get the area that you want to focus on first, and then we'll start narrowing things down from there. Once we get the geography handled, then we can start focusing in on certain neighborhoods or areas and really start identifying by price. So if you've got a range, say 2 to 300,000, 3 to 400,000, 350 to 400, 4 to 500, let's get a price range that you're comfortable in. And your financial partner in this, the loan officer you'll be working with, they'll give you an idea and an estimate of, hey, here's what your expected monthly payments are. And if that is what will work for you, let's go find properties that are in that price range. So price is very important. We'll establish a price range. The second thing we want to focus in on are all the criteria for the house, the characteristics of the house. Do you want a 2-story? Do you want a 1-story? Do you want a 2,000 square foot house or a 5,000 square foot house? Do you want, how many bedrooms do you want? Do you want a 3-bedroom, 2-bath, or do you want a 6-bedroom, 5-bath? Like, we want to start identifying, what are the framework and criteria for the type of home that you want to live in. So that's important. Also, things like if you want a swimming pool, there's a lot of pools here in Houston. So that will continue to narrow it down. So any sort of characteristic around the home, that'll be very helpful. And what happens is once we have the price and some of the characteristics and the location, geography, I'm able to put together a custom portal for you that will be updated on a weekly basis, on a daily basis. And it'll be a link that you can bookmark. You'll get an email every day with any properties that have a change in status, that are new coming to the market, or a price adjustment, and that will alert you to it. And that link will be evergreen. It'll update daily. So you don't have to go out to any of those real estate marketing websites. I will create a custom portal just for you that we can tweak and tailor, based on what you like or you don't like. Sometimes I'll put together the criteria and some of my clients will be like, we're not even close. No problem. I will dial in the criteria. If it's a change in geography, location, price, characteristics, add this, take that off. We can work through that. So that is the one thing that I will do. And that's a helpful resource because I don't know the type of home that you like. I just have no idea what you like to see, what colors you like, finishes inside the house, whether you like something a little more contemporary, a little more modern, a little more this, the paint colors, brick, tile, flooring, whatever. I just don't know what you like. So I will give you access to a resource that will open up all the options for you. And I'll invite you to tell me what you like. And the best way to do that through that portal, just like on Facebook or any of the social media, Instagram, there's an opportunity to click a heart just on each one of the listings. So click that heart. When you do that, it highlights that property, puts it on my dashboard as a property that you're interested in. When we go through, I will go through and look at those properties, be like, okay, I'm getting a feel for what they like. And more importantly, when we're ready to go out and actually see properties, which is the next stage, evaluation, then we'll start scheduling the appointments. So once we've identified a bunch of properties, we've hearted and favorited a bunch of properties that we want to see, now it's time to start evaluating. Evaluating is boots on the ground. We are going to get out and walk through these houses. Typically, when we get together, I want to get out and see 3 to 5 homes in a hour or two or more. And if it's in a geographic area that's relatively tight and we can get all the scheduling coordinated to go bounce from house to house, I want to maximize the time that we have together so we can get the best return. And our goal is to go out, continue to get the look and feel, and really start dialing in, especially when we're looking at homes, what exactly it is you're looking for in a home. So we'll go out, look at 3 to 5 homes. I will ask you while we're out walking through these homes, what score would you put on this home? It's very important to have a metric that we'll use to kind of measure what the score is on each one of these homes. Why? Because when we get out and see homes, we'll see 5, 10 homes, 7 homes. At the end of the day, we're so tired and we're like, I have no idea what the last home we just looked like was, or 2 homes. So I always ask, bring a pad, piece of paper. I will send you a listing, a list of all the homes that we'll see. We can print that out. I can give that to you, and we'll score it from a score of 1 to 10. 0 being absolutely no way, not even gonna walk in the place, to 10 being the dream home. I want to get a good understanding of where you're scoring each one of these homes, with the goal, intent, and effort that if we start with a 5 that's like ho hum, I want to make sure that those next homes we're starting to make improvement and progress in terms of what you want to see. So the important thing to know is when we start getting into this scoring homes in an 8, 9, 10 range, those are the ones that we really want to consider putting an offer in on. And because you put a score for one, when we walk out of a home, you can always adjust the score. It's up to you. This is a process. There's a logical and there's an emotional process that we're going to be going through as you look, feel, see, smell, touch, go through these homes. I want you to be excited about the home that you're selecting to buy. And, it's a flexible process. And so everything that we kind of go through will be fluid. And I really want to get the right home, get you in the right position to find the right home. So your feedback is super important. So as we go through this process, we'll evaluate, then we'll identify, and we'll go out into the homes and start evaluating them. We'll get out and see them on a daily basis. My goal is to get you out 2 or 3 times. And if we're having some challenges finding a home, by that second or third time we're going out, I'm going to start challenging you a little bit, saying, what is it you really want? And how have we not been able to find it yet? Because I want to make sure we're getting you into a home in the most efficient manner possible. And, I've got a lot of experience. I've done this hundreds of times helping people get into homes or buy homes. So, trust me through this process. And I want to get you set up with the right property at the right time that you are going to be most excited about. So now once we've gone through, the financing, the identification, the evaluation, now is the selection time. So this final phase is selection. This is the most exciting part. And it's also sometimes for some people, the most kind of nerve-wracking, especially if you're not big into making commitments. So the selection process is, hey, I love this home. Well, let's make an offer. You put a score on it as an 8, 9, or 10. Maybe we found your dream home. Doesn't happen all the time, but maybe we get close, because not every home is going to have everything that you want in it. And I think if you're familiar with the Pareto's principle, the 80-20 rule, the important thing is that finding a home that has 80% of what you want, and there's maybe this gap of oh, it'd be nice to have that. It'd be nice to have a pool. It'd be nice to have this bathroom look like this or that. That's the 20%. Well, the thing is that every home will have its 80% missing a 20%. And if you're looking for the 20% in another home and you find it, well, that home will have an 80%, but it'll have 20% of what the last home you looked at. So that's why it's important just to understand, hey, these are the hard and fast that I must have in a home, and these are the things I'm willing to work with. So that's why I always give that range. If you're valuing a home, putting a value or a score of 8, 9, or 10, those are the ones we really want to consider putting an offer in on. So the offer process is one of my favorites, and that's where I really get to bring the most value to you. So when we find a home, hey, it's an 8, it's a 9, we love it, it's got everything that we want, that's when we start putting the offer together. So now the offer, this is where the rubber hits the road. The conversation will get, very direct and clear. This is where I'm going to need to work with you in terms of what number, what do you want to offer on the house? How much money do you want to offer for this property? We've got the guidelines, we've got the guide rails of what you're pre-approved for. And, this is your time to make an offer on that property. The market changes daily, weekly, monthly. So regardless of the season that we're in, the market on whole is going to be competitive. And homes, especially good ones, don't stay on the market for a long time. So if you're looking at a home and it's new to the market, we're looking at a home in the first 7 days, just have a pretty good expectation that there's going to be other people looking at that property and going through the same process to say, is this the right home for me? And just know, and there's some urgency as we go through this process. If we find a home that you love, that you feel that it could be the one, we want to move quickly. And I will push you and encourage you to make those moves. So if you've got questions, want to evaluate it, it's great. And I've had it happen where I've had clients, we go out into a home, they're like, we love it, and then they want to think about it. We get home, or the next day, that property's already under contract. And so we have to go back out and find that next home. Whereas if you love it, you're ready to go, we can sit down, put the contract together right there. I can put it together within that hour, that evening. And, that is important, that we're ready to move, to make the decision. So I want to help and support you, feel comfortable and ready to make that decision. So the offer is very important. In Texas, we have a standard contract. The contract is a 12-page contract. It's templatized. You can Google it. The Trek 1 to 4 resale contract is the normal contract that's used. And we are filling things out. We're checking boxes. We're including, we're excluding. There's different pieces that we work through on the contract. I will provide you with a resource that can help walk you through the contract. I'm happy to walk you through the contract if you have questions. It's very self-explanatory if you read through it. Not the funnest reading, super important, obviously, but everything that you need to be protected for the deal to be successful is within that primary document of the contract. There's also addendums that we'll add if the property's in a homeowners area, homeowners association, if it's in a water district, if there's any sort of special feature to the property. If it's built before 1978, there's like a lead-based paint. There's a number of different addendums and amendments that will be added on to the contract as we go through. And I will help you put that together on the front end when as we put the offer together. So the important thing is we'll have a contract, we'll have any of those addendums. There's also a seller's disclosure that you will see. This is the download from the seller. Put it on a templated document called the seller's disclosure. It's pretty much their mental download of everything that's happened to that property within the time frame that they've owned it and that what they know of. So it's not fact, but it's the best oral history and documentation that the seller can provide to us regarding that property. It'll have all types of conditions, what's included in the property, what's not. Has it flooded? How old is the roof? What the homeowners association is. There's a lot of information that's in there that's super helpful just to help you evaluate the property to complement our walkthrough of the property. So with that seller's disclosure and the contract and the addendums and all of that, we will bundle all that up together. And, once you've identified what you want to offer on the property, we will package all that together and I will send it to the agent. The important thing that I do as we've identified a property you want to make an offer on is I reach out to the agent. I get a feel for what's going on with the property. Hey, what's the activity? How are things going? What's the feedback been like? If I've got any questions real quick, hey, it looks like it's in the flood zone, this, that, or the other. I'll ask some kind of probing questions, get a feel for the interest and activity on the property. And I'll ask, hey, do you have any active offers? They may not. If they do or they don't, it's important to understand, where they sit. So if they already have an offer under consideration, that's a sign, hey, it's a property that there's already interest in, active offer. They haven't accepted anything. So we still have the opportunity to make the offer. And the sign is we probably got to be competitive. We've got to do some things a little bit differently that will position your offer competitively. It could be an increased price, a waiver on an appraisal, waiver, shorter inspection time, option period, things like that. So there's a lot of little things that we can kind of tweak just to make your offer more competitive. And really for me, it's the rapport I'm able to build with the other agent to let them know, hey, I know what I'm doing. I've got a great qualified buyer. I'm familiar with the process. I'm looking to make this a win-win situation. So there's a lot that I do that you won't likely see just in terms of how I manage and negotiate and work with the other agent through this process. So a lot of people that I work with, they need to know, hey, what is the money that I need up front to get into a house? And it's a great question, especially some of the veterans that I have the opportunity to work with. Or if you're working with like an FHA loan, people, they'll be like, hey, I can buy this home without putting any cash down. Like a VA loan is 100% finance. Well, yeah, you're correct. It is 100% finance, which means like the VA will finance 100% of the property without having to put any cash down for the loan. That is correct. But there are other costs associated with buying a property. And so I want to walk you through what those are because a lot of people don't know. They think, hey, I talked to the loan officer and so, or I saw this ad. They said I could buy a house for no money down. Well, there's some truth to it, but the reality is most things in life are not free, and buying a house is one of those. There are rare exceptions where I've helped people get into a home without any money down and without bringing any money to the closing table. That does happen, not usual though. So some of the things I want to break down for you that are required upfront financially from you are these things. First, earnest money. Earnest money is your good faith deposit on the contract to purchase the property. So what's typical, and one as a disclaimer, earnest money is whatever money you want to put down on the property. It's a deposit that goes to the title company. They hold that money, and the earnest money is typically used to secure the contract, and whatever funds you put down in the form of earnest money are applied to your closing costs. So what's typical for the market here in Houston and a lot of places around the country is 1%. 1%. So if you're buying a home for $250,000, 1% of that is $2,500. So that's typical what the marketplace is and what we normally do. But that is all totally up to you. What's normal to the market does not have to be normal for you. So if you want to change what you want to offer in terms of earnest money, sometimes to be more aggressive, people say, hey, I'm going to put 10,000 down, or I'm going to, put 4% or 5% down, or they want to do less than 1%. That's fine. We can work through that. And it's just important to understand why and how, and, putting that together for the earnest money. So the earnest money, good faith deposit on the home for the contract. It's your intent to buy, and that money gets held at the title company. The other piece that comes in is the option fee. So the option fee is important. And whenever we're going out to buy a home, just like when you go to buy a car, you want to take it for a test drive. That is what this option fee is for. So the option fee typically ranges, one, it's all up to you how much you want to pay. What I see a lot of times, couple $100 for 7 or 10 days. And that couple $100 buys you this option period, this period of time where you get to go out and evaluate the property. It allows you access where you and I can go out and walk the property again. We can bring in an inspector that I'll talk about that will go through and do, kind of a foundation to roof evaluation of the property. And it just allows you, and also to bring in any other trades to the property. So that window of time, let's just say if you put in a $200 option for 7 days, what happens is you're protecting your earnest money inside of that option period. So you pay $200 to get the 7 days. If something comes up on the inspection report, something changes in your mind and your heart regarding the property, you get some feedback, well, we can terminate the contract inside of that option period and get your earnest money back. Does that make sense? So we're buying the opportunity to kind of take this test run, this option period, to evaluate the property more in depth than just the quick, 10, 15, 20-minute walkthrough that we did at the property, to really pull back, the layers of the onion to figure out what's going on with the property. And that time is super valuable, not required. I encourage all my clients to do that, especially if you're doing a VA loan. It's required to get a wood destroying insect certification or inspection done. Just we've got a clean report for that. And I think it's just great to get a clean inspection and overview of the property, so you know what you're getting into. So once we've got the earnest money in the option, the other thing that happens inside the option period is the inspection. Inspections aren't free. It's something you pay for, but just say, hey, this is the opportunity to bring in an expert to evaluate the property. Typically, they range from $300 to $500, depending upon who you use. Most are like $400 to $500, and they give you a full report on the property. I've seen reports anywhere from 30 to 60 pages to even some that are incredibly detailed, over 100 pages, but normally 50 to 60 pages is normal. Gives you the overview of the entire property, the good, the bad, the indifferent, the functional, not functional, condition, what things to look out for, how to work with this property, anything that may be updated or maybe an issue. That's what comes back on the inspection report. So that is another cost up front. So we've got the earnest money, the option fee, and then funds for an inspection. So, just with our example, $2,500 earnest money, $200 for option, and then $500 for $500 for the inspection. So just call it $3,500 if you're buying a $250,000 home. That's kind of the reserve that you need to have on hand, ready to deploy, depending upon the situation in the home. So it's important to have those financial resources available to you. If you don't currently have those, it may be time just sit back and evaluate, hey, what resources do I have available to me right now that I can get access to those funds? Or maybe it's not the right time just yet. Maybe we need to step back, save some money, put that, $3,000 to $4,000 to $5,000 in the bank that you can use to put down for the earnest money, the option, and the inspection. So this inspection report, like I said, is not required, yet it is very important. And the return on that investment, the $500 that you spend on that inspection report, that actually comes back and pays for itself, because what happens is when we find out that there's an issue with the roof or the AC or something is not working, I take that report and we will identify the items in there that you're not comfortable with, that you want to see repaired. We take that back to the seller and say, hey, we've got these items that we need to have addressed, and we want these repaired prior to closing. If they agree to that, we'll put all that inside of an amendment with all the appropriate documentation, and they'll be committed contractually to complete all of those items prior to closing. So you feel good about what's happening with your home and when you get into it. So that is the one major function of that inspection report. It helps us negotiate and gives me the leverage to go back and negotiate repairs on your behalf. What happens sometimes, some sellers, they don't want to put any money into the property, so they will provide a concession. So they'll say, hey, instead of doing all these things, A, B, C, D, we're just going to give you X amount of money. We'll give you $3,000, $4,000, $5,000 for that. So they'll do the repairs, or they will provide a concession, and both are great. Having the seller working with you to either do the repairs or provide financing or the concession costs, those are great. And when they come back with, say, hey, we don't want to do the work, but we'll provide you a concession, a couple places where that adjustment is made, sometimes we'll reduce the sales price of the home. I don't necessarily recommend that, but that is one area where we can reduce the price. So if they want to give us, instead of fixing an AC, they'll just say, hey, we'll reduce the sales price of the home $5,000 for that AC system. That works. But what typically happens, what that negotiated repair goes to your closing costs. So we'll have those contributions made to your closing costs because, and what I'll explain next is you've got some things you've got to pay for to get this house bought. So the closing costs are the important part that are really your responsibility to buy the home. I do everything I can to help negotiate and buy down, and those closing costs, we get that down. Working with a great lender is also super important because a lot of times they've got ways that they can work with the numbers to do that, to get those closing costs down. Typically, the closing costs on a home are anywhere from 1% to 3%. 1% to 2%, 1% to 3%. So if you're buying a $250,000 home, it's good to earmark, hey, closing on this home could be anywhere from $5,000 to $10,000 closing costs. That's with, no contribution, nothing. I mean, that's the total cost. So, that is important because you've got to have those resources available to close on the house. Like I said, there's some things that we can do. Your earnest money gets applied to those closing costs. Any negotiations, contribution to closing, or that gets applied. The other thing I can do on the initial offer that I do with a lot of the veterans that I work with, I'll negotiate up front the closing costs into the contract. So I'll say, hey, we're going to make this offer on the property, and we're going to ask for this amount seller contribution to closing costs. And so we're baking in the seller to, contribute to those closing costs. And that ultimately buys down what you have to bring to the title company when we get to closing. So when we're buying a home, there's some hurdles that we have to get through. I've talked about the inspection period, the option period. So that is our first real big hurdle. Once you're under contract and gone through that process, we get to go through the inspection period. That's the first hurdle inside the contract. So typically, once we get beyond that 7 to 10 days and you feel comfortable and confident to move forward, we are good to move beyond the option period. What that means is your earnest money is now committed to the contract. You still have an option to get that back, but you can't just say, hey, I want to terminate the contract and expect to get your earnest money back. That's not how it works. Once you're outside the option period, your earnest money is committed. And if you choose to terminate the contract, that earnest money will be kept by the seller most times. And there's always some circumstantial stuff that we can talk to if something does come up. But all intents and purposes for this conversation, that earnest money is now committed. So the $2,500 on the contract, that goes essentially to the seller if you choose to terminate. So that is important to know. Once we get beyond the option period, that earnest money is committed. The second hurdle that we get to work through is the financing hurdle. So it's important to understand when you get your pre-approval or a conditional pre-approval, your financing company, the lender that you've chosen to work with, whether it's a broker, a bank, whatever institution, they still have to fully put together the loan for you. So you've got the contract to buy the house and you've got a conditional or a pre-approval. Now they have to get you approved. Typically within the framework of the contract and the financing addendum that goes with the contract, we say, hey, 21 days for the lender to get you approved. A lot of times the lenders are able to do that. A lot of times the financing and getting all the final approvals go all the way up to right before the closing. So the important thing with that is if for one reason or another, if we have to terminate the contract, the financing goes through, something goes sideways, and we're inside the financing approval period, that 21-day period, for example, and your lender is willing to write a termination, and we get that, we've got the opportunity to recoup your earnest money because you weren't able to get funded for the property. You weren't able to get fully financed for the property, and you can get that earnest money back. So that is the second hurdle we have to get through, getting you fully approved for the financing. Then the final and most important hurdle is closing. So the closing process is where you get to buy the home. So we've done all this work. We've looked at all these homes. We've put offers in. We may have put in 10 offers. We may have put in one offer. And that's important to know too. When we go through that offer making process, it may not be, hey, we love this home, we're going to put in one offer. We've got to make multiple offers a lot of times. So it's important to get your heart excited and set, but also be flexible to say, hey, this offer didn't go through, we didn't get selected, or it just wasn't the right time. It already went off the market by the time we got there. So anyway, we've got to understand, we went through that process, making offers, we went through the option period, we went through the financing. Now we're finally at closing. It's very important to have a great dialogue with me and with your lender through this entire process. So we want to make sure that, hey, everything's on track, we're ready to go. My goal is to help coordinate and make this process as smooth and as possible and seamless. There's always hiccups and bumps that happen. I just try to do the best I can to help keep those as minimized as possible, or give you a little context based on my experience in terms of where we're at and what's happening. So, the closing is super important. There's a lot of activity that happens when we get within 2 weeks or 1 week of closing, because the lenders, they move by the closing date. It's just how it works, good, bad, indifferent. They move by, what the close date is. So there's this accordion effect of, hey, we need this information. There could be a bunch of random things that'll pop up. Hey, this came up on your financing history. We need to get this taken care of. We need a document. We need this. We need a statement. We need a letter of explanation. So just be flexible and willing to work with the seller or with your financial partner that's in this for the financing, just so we can get you set up and ready to go. So that is important, because once we get to the closing table, the title company is the clearinghouse for this process, and that is where all the magic happens. The important thing with the closing is, hey, we've got to close on the property, which means we go to the title company and we sign all the documents, and then it's got to get funded. The lender has to send all the money over. So once we check those two boxes, it's closed and funded, we are ready to go. And when that happens, the house is yours. And congratulations, we've made it through the entire process. Pray you enjoy your new home. I'm grateful for the opportunity to work with you through that process. And hope you enjoy this journey. Hope this information is helpful. Really want to give you the entire scope of what to expect as we go through this process. If you have any questions, please reach out and let me know. I'm happy to help and be a resource for you. I'm here to make this process streamlined and efficient for you. So just let me know. Grateful for the opportunity to work with you, to serve you, to be a resource and bring value to you through this process.